Hi, Christian Harris from MonsterMortgage.ca, talking to you today about business for self. So for our business for self clients, please listen when it comes to getting a mortgage or qualifying for a mortgage. Very simple. Business for self clients, at the end of the day, typically, and I'm business for self, my colleagues are business for self. Typically, a business for self client does not pay themselves every dollar that they make. When you're a T4 salary employee, you make $100,000, your taxes are deducted at source, and the banks use that $100,000 to qualify you, even though you bring home less than that. When you're business for self and you make $100,000, typically you don't pay yourself that $100,000 or pay tax on the $100,000. You leave money in your business and you take out what you need to take out. And if you take out $20,000, you're taxed on $20,000 personally. And the bank can only use that $20,000 to qualify you for a mortgage. And obviously we know that will not get you much of a mortgage in the GTA or probably anywhere in Ontario. So it's not the end of the world. A lot of people would rather leave the money in their corporation, pay a lower, corporate tax, than take it out personally. We do have business for self lenders that specialize in people who are business for self, like me and many of our clients. They basically can qualify you on your gross income, essentially. They do not care if you pay yourself less personally, they can use the gross income. And this is very good news. The banks can't. They would love to. It's not that they don't want to help those clients, because in many cases, these clients make a lot of money. It's just the regulators say, no, you have to, Mr. and Mrs. Bank, you have to make sure that you only qualify them on their net income. But it's good news for business for self clients, because there's more than just 5 banks to deal with. We have many lenders that specifically target business for self clients. And like I said, they use the gross income to qualify you. A lot of times I'll hear, oh, the rates are much higher. The rates are much higher. The rates are not much higher at all. There's a slight premium on the rate, but not a big enough premium to worry about. I've seen some 3-year rates as low as 5.09%, even 4.99 this year from our business for self lenders. That's not far off of what the bank's rates are at 4.20 or 4.30. It's volatile. It changes all the time. But I'm just trying to demonstrate that the premium is anywhere from like 75 basis to 125 basis higher. And yes, we all want to pay our lower rate, but at the end of the day, it's probably better than paying yourself every dollar out of your corporation personally and then paying personal income tax on that money to Revenue Canada versus maybe paying 1% higher on a $400,000 mortgage is $4,000 a year. Probably going to pay a lot more in taxes if you had to pull all that money out and pay yourself personally. So there's this myth that these lenders, these alternate lenders or these B lenders are so much more expensive. They're not. If you have good credit and you show good gross income, but you just don't pay yourself that much income, there's opportunities. And like I said, the difference is not enough to worry about, especially not enough to pay yourself all that money personally and then give Revenue Canada a big chunk of that money. So if you're business for self and you've been struggling trying to get some money from your bank, we have options. We have lenders. Don't fret. Don't worry. Give us a call and we can kind of look at your situation and walk you through some options. Okay. Thank you.